They're still letting us on the air, so we've got another show, the Twin Cities Real Estate Pros. We appreciate you joining us. I'm Ron Johnson, licensed real estate agent with RE/MAX Advantage Plus. David Nelson, also licensed with RE/MAX Advantage Plus. And we're allowing Aaron Vang back on the show from Bell Mortgage, a loan officer. And
Thank you.
Get into
Much appreciated.
We appreciate you.
First time it must have went decent.
He passed security twice.
They let me back.
Skeptical.
We tried not to, but
Awfully nice.
yeah,
He won't leave this room.
Right.
Very, very fortunate. They just said last minute, hey, can you just step in?
Yeah,
that great.
The trained poodle could make it.
Right.
Could you?
Right.
But actually, a pretty interesting topic to get into later in the show, and I don't know how many people know a lot about it, whether that's consumers or real estate agents. But we're talking about construction loans and actually too how that can tie into increasing what looks like what is low inventory in the market, and maybe the house that you want isn't out there, but there's a way to finance it to get the actual house that you do want in the end.
Yep. That's
So. Before we get into that, David, though, Parade of Homes is going on
Yes.
as we're recording the show right now, but Parade of Homes is happening for this spring.
Correct. Right now, up until March 20th, the Parade of Homes is going, and there's 450 houses on the parade around the Twin Cities. So really, no matter where you live, there's going to be something going on. Typical parade homes are open Thursday, Friday, Saturday, and Sunday, probably about 6 to 8 hours a day. But if you go to PreApproval.com, you can see the whole list. You can set up your itinerary, go around, check out houses. But it's a good opportunity to look at what's kind of the up and coming trends in the market, maybe some design ideas. They're all new construction, so it's an awesome time to go look at houses.
Yeah, and actually throughout all points of the metro, and they're all over the place.
And even Rochester, the whole state has.
Where's that?
I don't know.
It's in New York.
Google.
Yeah, it's in New York.
Use the Google.
Use the Google.
But yeah, in Parade of Homes, you talked about new construction. There's also a Parade of Homes that has the remodeler showcase as well. Right. And it's a little different financing process as we bring in Aaron here to talk about this. Whether you're building from the ground up or whether you're buying a home that you're going to fix up, and there's a couple of different products. Some people may be familiar with the 203K FHA program. Otherwise, there's the conventional program, which I think seems to be a little more popular with lenders. So that's what you're here for, to talk about how someone can finance new construction and remodeling.
Yeah. So we'll cover some of the construction misconceptions, I think, and again. There are quite a few, being that you need an exorbitant amount of money to put down to build a new home, such as 20%. And going back to the limited inventory that we have, this is a great piece to just let people know that if you're out working with the Imperial Home Team and you just can't seem to find what you're looking for, that same amount on your conventional financing, whether it be 3% or 5% down, or your FHA financing, which is 3.5% down, excuse me, you can actually get that in a new build. In today's world, you can actually go and buy and build a brand new house at the same conventional down payments as you can to a pre-existing home. And the same qualifications and everything apply. Visit previous podcasts for that. But to get to the builders and who you might be building with, there's multiple different ways of financing. If your builder, for example, is a smaller builder in the area, whether it be in Blaine or in Savage or wherever it is that we're Lakeville, where David covers, you're able to work with that builder. We can work and actually carry your financing for you. The good news is we don't actually charge you anything for the construction loan. Your construction financing, whether you put 3 or 5 or 20% down, up to the conventional limit of 417, is 100% no cost. You don't pay anything for your construction financing. We literally are going to take care of all those costs for you associated with doing that, the title fees, and basically give you the end loan with your 3% down. Now, you have to work in conjunction with us, because if there's changes, we need to make sure you qualify and everything like that. If you're putting in a different type of wood than you previously had and it's another $10,000 onto your purchase price, those are some of the things we have to talk about. But you can literally work with an individual builder. We can carry your financing. And some other situations, the builders carry their own financing so that you can still use that 3% down product.
Just to kind of clear up the language a little bit for the layman, for the client. So you're saying the construction loan, or for David, the construction loan is the financing to build the structure.
Correct.
And then you use the term end loan, which that translates to your mortgage.
Yeah, I should say there's multiple shows we could have thrown in on there.
Yeah.
End loan versus construction loan. It's a very good point, Ronnie. You actually have a construction loan, which is money that you get to have the builder build your home to your specifications. And that typically is done on a draw system where they use a certain amount of time. Well, they'll take the actual funds that they need for the wood and the framing and anything else, the foundation, and that'll be a chunk of money. And that is literally the construction loan. At the end of the process, your final, what we like to call the final end loan or the final draw on your construction loan, is your end loan financing. So for the layperson that actually is looking, or someone that isn't accustomed to looking for construction, they can treat it as just as a end loan financing with the availability to talk to us about any changes that they might need. The construction piece is really handled by us due to the fact that there's no costs associated with it. There's an interest only payment on the money that you draw, but it's always put towards the end loan. So anything you put towards the transaction on the constructions piece will be actually put towards your end loan.
Yeah, because I mean, a lot of builders, they're not going to break the ground until they've got some financial investment, because typically is when someone builds a house, it's usually designed specifically for that one buyer.
Right.
And let's say that buyer flakes out or whatever, that builder's stuck with that particular home. They may have features that are hard to sell, and they're probably going to lose money. So hence, they do want some skin in the game.
Yes.
And right in the beginning.
Yep. So in what you can do then, and that kind of brings up a good point, the difference between that construction piece and that end loan piece is that builder will now have the funds based off of your credit. We're going to allow them to take the funds for you and build your house. So if you run across an area that is right where you want to be and you can't find that Rambler that you want, you have the availability to build it at a minimum down of conventional 3 to 5% down.
And then also with this product, you can buy an existing home that maybe you need to redo the kitchen, various things like that. So use it as a rehab loan.
Yeah. So if we move on to from the construction piece that we just covered, and we move into more of a rehab, a remodel, back again, just to increase inventory and give yourself the wherewithal to put into something that you like. It might be a 4-bedroom, 2-bath, but it might have shade carpet from the 60s and wallpaper. We have products on the end loan piece, or rehab loan that we call, minus the 203K, which we can get into. We can talk a little bit about. It's probably another show, but
I think that shows why you don't like it.
Yeah, that's right.
That's after hours.
Yeah, that's after. Yeah, but it's a 5% down conventional product. You can actually get 20% of the actual value of the home. So let's say it's a $200,000 home. You can get $40,000 to do whatever you want to make that property yours. Now that property, you love the neighborhood, you love where you live, you've met the neighbors, you love the school system, you love everything about it. It's a block away from your gym, 5 blocks from your office, whatever it may be. You can turn it into your actual home that you've been looking for by using that rehab product.
Because sorry to interrupt you, but kind of what we're finding too with buyers is they're bringing less money to the table. So doing a lot of the listings, we kind of tell our sellers up front, if you could do as much fixing up and updating and remodeling as possible, your house is going to be more marketable, because buyers are coming in, the money they have in their bank account, it's kind of going towards their down payment.
Correct.
And they don't have that extra money to go out and remove that shade carpet, take down that border, if they wanted to.
Right. And it allows listing agents such as yourself to be able to tell your sellers, some of these things you can save and you can do these things, but now we have someone that can come in and they can actually do that kind of stuff for you. They can make it their own, and it kind of gives you the best of both worlds. Getting the money that they don't necessarily have that you're speaking of, and we give that to them and put it in the form of a loan.
I think some of the nightmares with some of the other products are the number of contractor bids you have to have and getting those approved, and the time frame that you have to have the work done, and those kind of things.
Sure.
Help dispel some of those, I guess, misconceptions about the conventional product.
I'll speak one time to the construction piece, and that's, you have to be prepared as a home buyer for both of these situations. And as long as you're educated on it, and that's what we help you do, and that's what you guys help them do, you'll be fine. But on the construction piece, you usually, typically the builder will handle all the bids for the plumbing and the wiring and the heating and the HVAC and the windows and all the stuff that you need, the cabinets to build the home. On the rehab piece, you are going to have a general contractor that you know or was referred to by me or Ron or David, and then you actually will get the bids for what work you're going to have to do. And of course, you're going to have to put a little stake in the game of, we want, hardwood floors from a Peruvian forest or whatever it may be.
Sounds lovely.
Yeah, whatever it may be that you're going to put into that bid, then has to be submitted, and then that's what we use for the portion of the money that we're going to give you. Any money that's not used for the project, another benefit to this conventional rehab program, is put directly towards your loan, so it's paid down on your loan, so you don't actually waste any of the funds, or you're not forced to spend money that you don't need to. So again, to reiterate, construction-wise, you're dealing with typically the builders and their crew that they have building your home, so it's a little bit less detailed. On the rehab product, you're going to have to get a general contractor, a licensed general contractor in the state of Minnesota, that's allowing us to have his insurance and things covered, because he's going to be doing some physical changes to the property, and we want to make sure that that's all done legally and up to code. You're going to have rely on the plumber and the electrician or the carpet layer or the floor person, whoever it is that he's recommending with those bids. And it's a little bit more work, but if you're really trying to get in a specific area with inventory such as this, the process that we've made it is very simple.
Let's say I'm a pre-approved buyer with you, whatever, $400,000. I'm out there looking, I can't find anything, and then you say, "Hey, have you ever thought about this idea?" Do I have to go back and get pre-approved, or am I pretty well set to go from that day?
That's a really good question. Most of all of these situations start with your pre-approval process, from pre-qualification to pre-approval, which again we covered in another show. But once that's done, the products and everything surrounding it are formalities, and relied on the education of the people that you're working with to take care of that. There isn't any reason somebody that can't find that $400,000 property in their area with the things that they need has to come back, and we completely structure a different program. If they've even offered on a property and for some reason that falls through, we're right back to where we're at. The only way that you're going to need changes in that situation is if you're out 120 days or so. You might need updated bank statements and pay stubs. But other than that, once you're set in that area, there's no reason to go back.
So I think kind of part of the lesson here is, like you're saying, if you can't find that actual home, you don't necessarily have to give up. You can create that home, whether it's out of the ground or create it from another existing home.
From that standpoint, it is exactly correct. It allows people the opportunity, some of that in today's world, like you said, there are multiple offer situations, to go, you know what, it's really maybe just not our cup of tea, and we'll go look for another one because we have these things that we can do to it.
And also, too, you look at a lot of neighborhoods that are kind of maybe on the downswing. If you go up into Edina, you see tons of properties that were built 50s, 60s. Mm-hmm. These people are coming in. The land itself was worth way more than the house. So they come in, that's not the house, but they want the land, trash the house.
Yep, we were just talking a little while ago, we're currently doing one of those.
Yeah, I've got one of those going on in St. Park.
Yep, so they want that land, they want that area, but they don't want the house. And if they have the funds and the ability to destroy one and build another, that's a great opportunity. And down here in Lakeville, where 2-3 years ago, wherever you go, there was farmland.
Right.
Now, wherever you go, there's new construction.
You're hitting a house.
You're hitting a house. And if there's a splotch of land that isn't wetlands, there's a house. Yep. And it's crazy. I think I heard somewhere that Lakeville had the most permits pulled the last 2 years in any other city, the Twin Cities.
In 2007, a lot of the land was sold, and a lot of the bids went out to some of the bigger construction companies, and they bought up pretty much everything that you could possibly build. And they are building houses after houses after houses.
Yeah, so it's if you're looking for new construction, Lakeville's great, but eventually, there's many things that the people can do, but they can add more land.
Right.
So even that new construction inventory is starting to get thinner and thinner, and the better lots are being picked off.
And that's
Now sketchy land.
If you're moving out and looking at, in this area, you're looking at an area that has land that they haven't built on, and you're able to find that piece that you want. We've got land financing as well. Let's say you're not building this year and you're still in your house and there's some things you want to finish the basement or something like that before you put it on the market. We've got it so that you can actually purchase that land for future build opportunities. And we do that for individual customers, and we don't carry builders on it. So it's our way of saying, if you got that opportunity, the pre-existing haven't worked, the rehab isn't a fit, and all of a sudden there's a piece of land you really think it's going to be where you want to build your house, we've got that financing available as well.
We should let people know how to get a hold of you if they're interested in more information directly from you.
For all the information, if you're visiting on the web, it's going to be www.aaronvang.com, and that's AARONVANG.com, and most assuredly via text or phone call by cell phone, which is 612-702-5651.
All right, so it's really, as you were mentioning, some of the teardowns, and I don't know if you've seen this in your industry as well on the mortgage side of it, but it seemed like a lot of those teardowns started in Edina and southwest Minneapolis.
Sure.
Eventually, you're going to run out of houses to tear down.
Right.
So, and I actually sold one.
Never.
Yeah, sold one just in January to a good friend of mine who bought in southeast Minneapolis. So it seems people are either getting priced out of southwest, and that trend is moving on the other side of Minneapolis, and it's also going from Edina out to St. Louis Park.
Yep.
Where now, because again, there's only so many houses you can knock down in Edina, and you can only so many people can afford that. So it starts moving out to other cities. So it seems like, I don't know if it probably won't be the trend in Lakeville because it's not as old of a city.
Right.
But
Sure.
some of the older cities, it seems like that trend will keep kind of spreading out to where you can knock down. You like the neighborhood, or those type of things, and you can just knock down those houses.
Yep.
You see that in Eden Prairie. It's starting to get there. Some of the older homes are, they're kind of doing the cost, pro cons. Like, how much is it going to cost to kind of, modify it to where it is, or should we just tear it down and put something up that's more open, more modern? And that's how the market works. You got the ebbs and flows, and neighborhoods grow and they decline and come back up again.
Yeah, no, I've done open houses at some either brand new homes or remodeled homes. Neighbors come in and say, we're not looking to buy. We decided we like living here, so we're going to do a $100,000 addition on our house.
Sure.
So that's also kind of becoming the trend, which doesn't help us at all.
No,
but
we can help.
We do not recommend that.
We can help with that.
But it might help you a little
It might
bit.
help. Yeah, it helps us a little bit. Yeah, that's an opportunity as well. One of the key caveats that I do want to stress in that situation, a tear down or a rebuild or a $100,000 addition, you must know that the value of that property when the finished product is complete will have to value at that additional cost. Anything that doesn't have value, if you're $50,000 less than what it actually is supposed to be when the work is all said and done, that is money that you as a customer have to cover.
Yeah, and I guess that's another show too, getting to appraisals. But how, if there's a neighborhood full of 1950s and 60s built, 1,500 square foot houses?
Don't be the first one.
And exactly right. The neighbor builds a 3,000 square foot 2-story house.
Yeah,
how in the world does that
don't be the
appraise?
first one.
But somebody was.
Yeah.
Yeah.
They've got cash. They
You
don't
know,
care.
and he's accurate to a T. What we've seen, a few in Edina, is what it's taken people that are maybe in the financial industry, seeing what's happened to the economics of retirement accounts and bonds and stocks and things of that nature, and gone, we're going back to real estate. So they'll pull an absorbent amount of money and put it into these properties or even into their own. Mm-hmm. And that pretty much sparks everybody else for doing it. There isn't a lot of financing when it comes to Fannie and Freddie, which a whole another show.
Stay tuned.
Yeah, stay tuned. That is capable of supporting anything that physically isn't there. That's when you have to have a lender that has other relationships, and you have to go to local banks and people within the city, and those people will, look at that, because what they do instead of what we have the availability to do is different, and it allows them to finance things like that.
It's always curious. I'm actually working on a deal right now. It's slightly different, but it's the builder owns the land.
Sure.
So he's built, my buyer's building on that land, and the seller is uncomfortable with the buyer's particular lender. It's a big lender.
Sure.
So he wants an upfront appraisal.
To remain nameless.
To remain nameless. The seller's forcing the buyer. First, he wanted a pre-approval with his lender, and the buyer didn't want to do that, and that's just going down the wrong road. But is asking then our buyer's lender to do an appraisal up front. So then they don't start the building cost, because they're doing a custom build.
Sure.
So that, there's only so much you can build that you could sell to the masses, because then all of a sudden you build it. And they're concerned that the changes he's going to make won't appraise. So they're getting that taken care of up front. Is that something that you see as a common issue?
Yeah, it's just some common issues that you'll want to do. We kind of take the first step of appraising the property prior to anything being done. And then any bids or anything that's going to be done to the property is given to the appraiser from that initial appraisal. And then he will evaluate based on the area if that's going to be supported or not. And that becomes, again, is a huge communication issue, is that you have to be able to have open communication saying it's going to be $20,000 light, and be able to support all that information. And know that you might have to do a smaller room, or you might have to consider finishing whatever portion later, or whatever it may be, for then the market to catch up. But yeah, you typically always want to see an asset supported before you put any monetary value behind it.
So from the buyer standpoint, and it's our job as well as real estate agents to help that buyer understand, even though you've got the money for this, that house may not go on this block.
That's correct.
For what you're going to, because then your financing is not going to work out.
It's a perfect example. During some of the bubble a few years back in California, there was a huge problem. Mortgage companies were actually telling the buyers that, listen, this is the value of it now. By the time we get done, you might have to write a check for the difference. And that's just the fact of life. The prices and the values of the homes were falling that fast.
Right.
So.
And then from the if the buyer can't get finance for that, then the builder's kind of stuck with this custom built house that he built.
Nothing else.
And they're going to sell it for less, probably.
Well, they'll keep your earnest money too. Most likely, in some of those situations.
Another whole other show.
Yeah, so you have to make sure that you're protected there with your earnest.
Yeah, absolutely.
But when you build these custom built homes, it has something that you're the only person in the world who likes.
Yeah,
like a speakeasy.
Exactly. Yeah.
Well,
the builder has to turn around and try to sell it to somebody else.
You have. I've ran into just last week an opportunity that was trying to help a person that was told something, unfortunately, that was inaccurate, and it was a dome home, and it's beautiful. Everything about it is great. I saw the appraisal. I saw the appraisal. The value was supported, but because of the unique situation of the home, that has one buyer that really kind of wants it, and that's it. And it's not a situation where multiple buyers are going to buy it because the land is so big and so valuable. It's literally a unique situation for a unique buyer. And that's when, you look at the appraisal and you can see that, the closest comp for a dome home was 14 miles away. Which
it's surprising.
It is.
It wasn't the Metrodome?
No, right? That's
the dome.
That's what I'm saying. Even 14 miles for another dome home seems, not bad. I would have assumed it would have been like 100 miles. But it's just one of those things that you have to assess, you have to communicate correctly, and understand that it doesn't fit in the financial realm of which most mortgage companies have to stay within.
Well, part of our job too as real estate agents is someone says, hey Dave, hey Ron, I'm thinking about doing this to my house. We know the market, so come to us and we can kind of say, yeah, it's probably not the best idea to put in that volcano in your backyard.
Exactly.
Or remove that bedroom and
put in a 4-acre bass pond,
which was pretty awesome.
Yeah,
but it may be, again, good for you, and it may fit your need right now. But when you're looking to sell, don't get mad when you've got that one buyer, and that buyer happens to be you.
Yeah,
you're kind of pigeonholed.
Right, and particularly, and I always, when people bring things, I say, okay, is this your starter home? Like you're living here 5 years and then out, or is you're going to live here for 30 years?
Mm-hmm. Correct.
And maybe that helps a little bit, but if you're going to turn around and move in 5 years, don't expect to get the money back for the volcano.
Yeah.
So you have to you have to be reasonable with what additions you're going to put into a home.
Take as many pictures as you need.
Yeah.
Right.
Save them when they know that that's got to go away.
Exactly, because you're gonna buy the house for fair market value in theory, and then you're gonna add all these other things. Now you have to add the biggest, baddest house in the neighborhood, and in 3 to 5 years, assuming the market just doesn't shoot off, you're never gonna make that money back.
No, not at all.
I guess some of the things I'd like to ask you guys, and I would presume that.
We're asking the questions.
Oh, sorry.
All right, no.
Yeah. Who gave you the right to ask questions?
It was a pleasure being here.
Where's the hook?
Yeah. What are you seeing with on your listings? We talked about multiple offers. With your buyers, are you having to spend more time? And can you just speak to somebody that might be looking to list or might be looking to buy, what they can expect to go through? You know, once the pre-qualification and pre-approval have been done, I would like to know for myself, and I'm pretty sure they would, due to the fact that the inventory is low, it's at a 10-year low. What can they expect? I guess a lister or a buy side, and I guess I'll let either one of you run with that.
I've got two couples that are in relatively the same boat. One of them owns a townhome kind of where Rosemont, Apple Valley, Lakeville meet, and they want to buy anywhere from Blaine to Lino. They're afraid to put their house on the market because they're afraid it's going to sell, and then they don't have anywhere to buy.
Yeah.
I've got another couple, very similar situation. They're in South Minneapolis. They're pretty wide. They're kind of Blaine, Plymouth, even Savage, kind of getting out second and third tier. Same situation. They for sure, and if we price their house right, it'll sell because of the neighborhood that it's in. It'll sell right away. But then they're going to feel forced to buy something they don't want. So it seems like people are kind of stuck.
Yeah.
You know, if I buy, then okay, now I've got to sell my house to get from under it.
Yeah.
Or if I sell,
Where do I go?
all of a sudden they feel they're forced to buy a house that maybe they don't like.
want.
So it's kind of a weird place to be.
Yeah.
Both of them are in a situation where they're not contingent, so they can go buy their other house.
Kind of
Then it's just a matter of floating two mortgage payments.
Sure.
So they're kind of
That's
kind of stuck.
That's stress that a lot of people,
Right.
I would say that top 90% don't want to deal with.
Right. So yeah, we can get the inventory out there if they make that step and list, but they're scared because somebody actually might buy it.
Right. Yeah, that's
crazy.
That
right?
is
Yeah.
crazy.
And that's exactly right. I mean, you're seeing a lot of sellers. I was over the weekend. Two people had stopped and were talking to me, and they're like, "We want to sell our house." And this is the Apple Valley people. They're like, "We want to find a Rambler in Apple Valley, all this stuff." I'm like, "That sounds like a great idea, but you've probably got one house maybe for sale, and you've got 1,000 people after it.
Mm-hmm.
So you know, it's hard to sell your house knowing that's going to sell so quickly." And then if you have to buy another one, it's hard. The ones that are making it like bandits are the ones that are going from buying to possibly renting or selling in Minnesota and maybe moving out of state, because, you know, even though you're going to sell your house, you contact us early enough, we can do the pre-listing, get the house on the market before it even actually hits the market and start getting the excitement out there, because then you can kind of prepare yourself. So when it hits the market, you may already know you're going to have a buyer that first day, and you can kind of plan accordingly that, all right, we'll be able to move in 40 days to Colorado, to North Dakota. Not sure why you would. But,
Oil and McDonald's pays $15 an hour up there, don't they?
Yeah, you can't.
They used
Depends
to.
on what part you're in, but I heard you
Yeah.
wait an hour and a half just to sit in an Applebee's.
Go to Mandan.
Yeah.
But okay, I think an important lesson too. It's a seller's market, right? There's not
Yeah.
not a whole lot we can do about that.
Seller's market with nowhere to go.
With nowhere to go. But so when you have a person who's a buyer and a seller, I think they need to understand that, okay, you're not going to make out on both sides. You're not going to get a steal on your buy side, and you're not going to fleece somebody selling your house.
Those days
so
are
you have
over.
to find a
Yeah,
balance
I mean, right
there
now anyway,
somewhere, because if it's, you know, if you're going to sell, you're probably going to do well selling.
Mm-hmm.
But if you're going to buy, you're probably going to have to pay close to what they're asking for, because the seller doesn't have to sell it to you because the next guy down the road will buy it.
Right.
So I guess kind of maybe educating more on what a seller's market means and what it means on both sides, that you're not always you're going to get a fair deal ideally on both sides, but you can't necessarily make out on both sides.
And it comes down to preparation. I mean, if you're going to sell your house, you got to be prepared. You know, don't put your house up for sale until it's 100% ready. Don't go look at houses until your finances are 100% ready. You know, we had our last podcast was on getting pre-approved. There's things that you need to do as a buyer and a seller before you even consider buying or selling. That's going to put you in the best position, because all of a sudden, if you don't, you find yourself in this gray area.
Yeah,
that
and
kind
you're
of-
lost, and
you're lost, and
and
you're
it
in a pickle.
really it doesn't it makes it for a terrible transaction, a terrible experience. I think taking something from a thought to an action requires all those steps, and unfortunately, and this is an opinion, that there isn't a lot of real estate agents out there doing what you guys do. So that's kudos to you and knowing that they had to educate people.
That's
is
a
the way to
perfect
go.
way to end the show. We got 20 seconds. Aaron, tell us how to get a hold of you again.
So you can visit me at my website, which is www.aaronvang.com, or cell, phone or text 612-702-5651.
And we're online, David.
At TwinCitiesRealEstatePros.com or visit our YouTube channel, ImperialHomeTeam.tv.
Aaron, Dave, Ron, thanks for joining us.
Thank you.